Hello, this is Dr. Paul Cottrell, and I'm recording this on June 15th. We're going to go over the markets before the open on Monday and giving my perspective on that analysis, what the support levels and the resistance levels are. So please help support the work that I do by going to my website, the-studio-reykjavik.com. And if you would, please donate through Stripe, PayPal, or buy me a coffee. You can just click the links here and you'll be able to donate. It's a great way to help support the work, especially if you're international or domestic. And take a look at the great products that I have. I have ebooks that you can purchase. I have different supplements and classes. I have two classes that you can purchase for $50. One's on pulmonology, the other one's on immunology. So let's talk about the supplements. You can get the toothpaste. It's a very high quality toothpaste made from structural nanosilver. You can get the Max 14 that I have in stock. You take a teaspoon a day, swish in your mouth, gargle about 30 seconds, swallow it, and that will improve your immune system. Get the gel. I have the gel in either the tube form or in the quick dispenser form, very high quality. It's a dual purpose product. You can put it on your hands, around your mouth, around your nose, around your ears, lightly coat your nostrils. If you're not feeling well or someone around you is not feeling well, you can use it as daily skincare product. You can use it as an aftershave. You can put it on a wound and it'll help to heal the wound. It's a very high quality product. Make sure you have some at your house or at work. I also have soaps. You can get it in charcoal tea tree, lemongrass, peppermint, and lavender. Very high quality soaps. I also have lozenges and drops. The drops are smaller. You can get 100 per bag. You can get it in blueberry, honey and lemon, and cherry. Get a few bags for your household. I also have in stock the elderberry zinc lozenges, which are larger, and you can get 21 in each bag. Get a few bags for your household. Be prepared. I have a probiotic that's in a veggie cap form. Taking a probiotic is super important for your gut biome. Cleanse, you use it just like the Max 14. It's a 30 parts per million. It's something that you should be using every day. Take a teaspoon a day, swish in your mouth, gargle about 20 seconds, 30 seconds, and then swallow. And then the multivitamin. The multivitamin is a great foundational piece to build your health protocol. It has vitamin A, vitamin C, D3, E, B1, B2, B3, B6, folate, B12, biotin, selenium, manganese, zinc, iodine. So please go to my store, the-studio-reykjavik.com, and get the multivitamin. C60 is a very potent antioxidant. You can get it in a 2 ounce, a 4 ounce, or an 8 ounce configuration. By taking a teaspoon a day every day, you're going to soak up those free radicals, improve the health of your mitochondria, your energy levels will go up, the tissues will perform better, your cells will perform better, your organ systems will perform better, boost up that immune system, boost up that endocrine system, and it'll also help with your neurons. By reducing the stress of the neuron, your neurons are healthier, you're soaking up those free radicals will improve the mitochondrial health in the neuron, and your neurons will have more ATP to produce the neurotransmitters. So please go to my store, get the 2 ounce, the 4 ounce, or the 8 ounce configuration. You can get it in extra virgin olive oil, avocado oil, or MCT coconut oil. I also have vitamin D3, very important for bone density and cardiovascular health. Vitamin C and magnesium helps with the immune system, with your skin, and with brain function. Magnesium helps with the efficacy of D3. So you should be taking magnesium in your diet or through supplementation to improve the efficacy of D3. Omega-3 reduces the stickiness of your red blood cells to reduce clotting. Also, omega-3 brings down systemic inflammation, and omega-3 helps you to control your lipid profile. Helps to bring down LDL levels and increase your HDL levels. When you control your LDL levels, you're reducing the chances of oxidized LDL and reducing the chances of plaque formation. Ashwagandha root helps to control your blood glucose levels and your cortisol levels. By bringing down your cortisol levels and your blood glucose levels, you're reducing inflammation, and that helps with your immune system and your cardiovascular system. Now, good night formula. Good night formula is really important for getting into those cycles of REM sleep so you can consolidate memory, be well rested, and to detoxify your central nervous system. Good night formula has tryptophan, melatonin, GABA, and passion flower. Probiotics. This probiotic is a powder form, and again, it's very important to take a probiotic as a foundational piece for your health protocol. Resveratrol, something that I've been taking for decades. It soaks up free radicals because it's an antioxidant. It helps with youthful gene expression, helps to get rid of senesced cells. And by soaking up free radicals, you're improving the health of your mitochondria. Vitamin B complex is super important to take, especially if you're 40 years of age or older. The first four B vitamins helps with the mitochondrial health. The vitamin B complex helps with cellular metabolism, and B12 helps with your neurons. Turmeric soaks up free radicals and brings down inflammation, super important for your immune system and your cardiovascular health. Magnesium and zinc boosts up your immune system and your brain function. Lignans brings down inflammation, soaks up free radicals, helps with your immune system and your endocrine system. Collagen, taking collagen every day helps with your skin, your hair, your nails, your joints, your musculature, and your bones. Digestive enzyme complex helps to reduce the load on your pancreas. It helps you to digest proteins, lipids, and carbohydrates. Super important if you're age 40 or older to take digestive enzyme complex. Digestive enzyme complex also has bromelain in it, which is fibrinolytic that helps to break up clots. Clarity factor, super important to get rid of that brain fog and allows you to concentrate on the tasks that you are trying to focus on. Super important. And over time, what's going to happen is that you're going to improve your positive neuroplasticity. You're going to think faster. You're not going to have the brain fog, and it'll improve your memory. Olive leaf extract, dual purpose product. It helps bring down inflammation. That helps the vascular system and your immune system. And it also helps the lipid profile, which helps with your vascular system. By bringing down LDL and increasing your HDL levels, you're reducing plaque formation. Zeolite is a supplement that you take every day. Take 2 or 3 small drops underneath your tongue, drink it with filtered water, and that will detox heavy metals, toxins, and chemicals from your body. It will bind to those chemicals or toxins or heavy metals and allow you to urinate them out in about 6 to 8 hours. You should be taking zeolite every day. Boomer Boost has 68 nutrients. It has a very comprehensive profile, very comprehensive profile in the powder. This is a great supplement to be taking. And by taking Boomer Boost, you are going to be able to focus on multiple systems like your cardiovascular system, your musculature, your brain function, boost up those energy levels and your metabolism. You'll lose weight safely by taking Boomer Boost. And get the heirloom barley. Heirloom barley is a high density protein. You get a big scooper in this. Take 1 scooper a day, mix it with soft foods, filtered water, a smoothie, or just with milk. Take it every day. It'll help to detoxify your body, bring down inflammation, and soak up free radicals with superoxide dismutase. Super important to take. Ubiquinol. Ubiquinol is the most bioavailable form of CoQ10. It's an antioxidant, so it's going to soak up free radicals and help with the health of your mitochondria. They'll boost up energy levels. And ubiquinol helps to protect neurons. So please take ubiquinol every day if you're age 40 years or older. NAD plus also protects neurons. NAD plus supplement boosts up the NAD plus levels, helps to repair DNA damage, mitochondrial and cellular DNA. And like I said, it helps to protect the neurons. Stack the NAD plus with the ubiquinol to get the max benefits to protect your neurons. Vitamin K2 MK7 molecule helps with your vascular system and your bone density. It's synergistic with D3. I have two different types of deodorants. You can get it in a citrus or in peppermint, lavender, and tea tree. They're for males and females. They're dual purpose. They're used as a deodorant, but they will also help to detoxify your body. They're made from essential oils from the Himalayas. There's no aluminum, no baking soda in it, all natural. Please go to my store and get the deodorants. And I also have anti-aging boxes and longevity boxes targeting different systems at different price points. So please take a look at those boxes. It's a great way to start on your health journey. I've curated these boxes at different price points to allow you to start on your health journey here. Here's a perfect example. Anti-aging deluxe box, which you get the Max 35, the C60, the D3, the vitamin C and magnesium, the toothpaste, the deodorant, the probiotic, the resveratrol. You can pick which C60 you want and which deodorant you want. So it's a great way to start on your health journey. So many of the boxes are like that. So please take a look, peruse, and help support the work that I do by getting the great supplements I have. With that said, please go to my store, the-studio-reykjavik.com, and get the great products that I have so you can help support the work that I do. So let's take a look at the market analysis here. Okay. So we'll start with BITO. We're going to go through many different slides here. BITO is an ETF that's tied to Bitcoin, longing Bitcoin. All right. Now, as of this recording, Bitcoin is trading at around $105,000. All right. And we have lots of event risk going on with Israel and Iran's attacks. So we have to be mindful of that. So we have at the close 2106 for BITO, and we have a resistance point at 2148 and another resistance point at 2250. We have a support level at 20. So if Bitcoin starts to go and break 100, go below, then most likely we'll be testing the 20 support level on BITO. If Bitcoin starts to rally and starts getting closer to 109, then we'll be testing and most likely break the 2148 and be testing the 2250 resistance level. So and typically Bitcoin is correlated to equities. So if equities rally, we most likely will see an uptick in Bitcoin, but there's a little bit of risk off on Bitcoin that I've noticed in the last few trading sessions. So SPY is an ETF to trade the S&P 500. All right, so this is a great way to get exposure to equities. Now, like I've been saying, as of this recording, we were trading for SPY 597. Right? That equates to 5,970 on the S&P 500 index. So 597 is SPY's trade right now. There's a support level at 5,750, and there is a resistance level at 6,000. Now we went over that 6,000, I'm sorry, 600. I keep on, I apologize because I keep on in my mind thinking the S&P 500 index and not SPY. So SPY, let me repeat. SPY is closed at 597, and we have a support level at 575. All right. That support level, all right, has built up a decent a decent strength. We have a resistance level at 6,000. I'm sorry, 600. We did break that 600 and then came back down. So we're going to have to retest that 600, and then the next resistance point is going to be 613. All right. If you want to equate that to the S&P 500 index, that's 6,130. So if you start hearing me say thousands, I mean the index, not the actual SPY ETF. I apologize for that. So again, we're trading at 597, support level at 575, resistance level short term 600, another resistance level at 613. I think that in July we will be at an all-time high in the S&P 500. That would mean that most likely SPY will be above 613. We'll be above it. Okay. With that, here are some of the risks. If this war between Iran and Israel starts to escalate, we may actually be getting closer to the 580 mark for the S&P 500 and be testing 575. And Bitcoin will probably go down. If the escalations, the risk of escalation starts to die down, then most likely we'll be retesting the 600 for SPY. And when we do that, we probably see a little bit of risk taking in Bitcoin. So Bitcoin most likely will go down if this equity market starts to go down and tests the 575, or Bitcoin will go up if we start to see equities start to get inch closer to 613. All right, oil, lots of risk going on here. All right, we got big candles here. And this is because of the attack by Israel on Iran. Now, if you look at these, candles are usually small. This is a week chart. So each week is a candle, all right? And yeah, sometimes you have big candles, but then they come back down, right? You had a big candle here, and then another big candle, but then it started to come back down. You had big candles, and then it started to come back down, right? So these big candles, there's big risk. Now, I also have a chart here, the RSI, which is the relative strength index. It doesn't stay above 70 for too long. It doesn't even stay above the 60 mark for too long. It's usually around 50. All right. So we are slightly overbought. We're definitely overbought in the day chart. But on the week chart, we're inching closer. So could we rally more in oil? Yes. But another week or two, and it's going to have to come back down. So let's take a look at this, at what we're looking at here. As of this recording, oil closed at 73.18. Now, this was before Israel did further strikes on Iran and Iran hitting Israel. So I suspect that oil will go up on Monday. And tonight during the Asian session. But there's not a whole lot of liquidity during the Asian session. So you'll start to see the big move around when London comes online. So I suspect that oil is going to go up. Now, the thing is that WTI and Brent crude spread is narrowing. Usually there's a $2 to $3 spread. And the last I looked, it was only $1 spread or maybe slightly above that. So that doesn't make much sense. All right. Now, could this keep on going up? Yes, but I think that there's probability of it going down shortly after. Now, there used to be a trading range before Israel decided to do their strike. That trading range was around 61 handle to about a 63 handle. And you can see that here. It's kind of trading up and down, right? And then there was some warning that might be a strike, and then oil started to go up, and then the big jump up. So it passed the 65 barrier resistance, and it passed the 68.50 barrier, and it passed the 72.95 barrier. So we are inching closer to an 80 barrier, a resistance. So the way I'm looking at this right now is that we're going to have an 80, see this spike right here? It's just slightly above 80, right? So so this right here is a target, is a potential resistance point. So around 80 is a resistance point. Now, if you want to use the fib sequences, you're looking at about an 80, it's hard to read it. 80, let's see, that's 93. That's 93, 80, maybe an 84, somewhere in there. I'd have to dive in a little bit. Because of this overlap, it's hard to see it. Maybe about an 84 maybe an 84. Okay. But right now in the medium in the short term, 80 is a resistance. 72.95 is a support level, but that might break. So, all right, so let's take a look at this. If with the new news that came out this weekend, oil's probably going to go up and test the 80 level. It'll probably bounce off of the 80 level, but it may go above and go to 84. But at this moment in time, resistance is at 80, support levels at 72.95. Now, the way I am taking a look at this is I'm shorting it. I'm not longing it. I'm just going to keep on shorting and buying into the short as it's going up. Because my take is that as this is inching, like over here, back and when this took place in 2022, it inched up, it went up and then it radically went down again. Here's another one. It inches up and then comes back down. But this is cycle. This is a cycle. This was, some sort of event risk, and then it came back down. So I see this as event risk that comes back down. Oil can't stay up above 80. It can't even stay up above 70. So it has to be coming back down in the 60 range. And 65, I think, is probably fair. 65 to 68 is probably fair value. All right. Now, another thing that you need to watch is that it's been cycling up and then down and up and then down and then up and then down. And you notice that each up is slightly lower. All right. So we're right in a kind of a channel here. And this is a week chart on oil. All right. So on the week chart, the weekly chart, we are in a channel here. So the chances of it going way above 80 is probably low. So, 80 is a pretty strong barrier. 84 is even stronger. And I don't think 72.95 is a very strong support level. I think 62.50 is probably a stronger support level. And to prove my point here, the larger Fibonacci sequence is usually a stronger support versus a smaller fib sequence. And we're talking 50% retracement on the long fib sequence for the 68.50 versus the 72.95. So my take on here, my call is that 80 is a barrier. Yes, there is event risk with Israel. That will be probably tested on Monday. Short-term support level at 72.95 and an additional support level at 68.50. And the way I'm doing this is I'm just buying in and just shorting the oil. I'm not buying in, longing it. Okay, next. Boil. Boil is an ETF that is tied to natural gas. Natural gas in the short term has been trading between anywhere from 61 to 60, or I'm sorry, 6, not 61. Natural gas has been trading in the futures market at about 3.1 and as high as 3.7. Now, natural gas closed at about, I think, 3.55, something like that on Friday. Let's see. Natural gas. It closed at 3.6, roughly. So it's at around 3.6. All right, so it's at 3.6. And like I said, for the last couple weeks or so, it was trading in a range between 3.1 to 3.7. So it's a little bit on the high side of this trading range. In the short term, 3.5 to 3.7 seemed like a good trading range last week. Now, Boyle is the long ETF for natural gas. So if you think that natural gas is going to go up, buy Boyle. If you think natural gas is going to go down, then purchase Cold with a K, KOLD. Now, natural gas, yes, we're in the summer months and the need for natural gas goes down, but in August, the futures start to go up for natural gas, or in September, August, September. So starting to accumulate positions in the long may actually make sense, but it also depends on what the inventories are of natural gas. So, my take on this, and I closed my natural gas position on Friday. But my take on this here, looking at Boyle, is they closed at 52.88, right? And this is a daily chart. So 52.55, I'm sorry, not 52.88, 52.55. And we have a support level at just under 50. So we're talking around, that's 45. So we're talking about like around 49-ish, maybe even 40, close to 45. So 50, to call it even, 50 as a support level, short term, closer to 49 or 45. So you have a support level at 50, which is more psychological, maybe about 49 or 48 with the end of this downtrend, and about 45, just about 45, probably around 46, based on the end of this downtrend and the beginning of an uptrend. So just keep that in mind that this is cycling down. It is in the summer months, so that there's chances of this going closer to 50 than to go up. But as we get closer to August and September, it might be going up. Now, here, let me show you what I mean by this. Okay, so this is August and September of last year. Okay, in August, right, it started to go up and then it cycled back down in September. And then in September, it started to cycle way back up into October. All right. So, of course, temperatures have a lot to do with this. So I suspect that sometime in September, we're going to see something like this. in 2025. So it's possible that we hit like 46 and then start to creep back up. And if you think about it, these lower points last year were close to 40, just above 40, before it started to go back up to approximately 60. So you can get a good increase in value by thinking about this move that will probably start taking place in August or September. All right. So, accumulating shares in August, September might be a smart idea. If you think that this is going to go down a little bit, down to here, and you want to do a short play, maybe buying into cold maybe be a better option. But just watching the market, it just seems like it doesn't want to stay below 3.5 for very long for natural gas. And then it pops back up and tries to approach 3.7 again. So I suspect that there's going to be a decent move in August and September. Now we're in June, so maybe it's a little bit too early. Now, if you look at, the June and July numbers, you can see that in June, it was at almost 100 in this ETF. And, in July, it started to, go down pretty rapidly here. Now, and then you go into January, February of this year, and it starts to climb back up, so it's not just supply, it's not just demand, it's also supply too. So this ETF can move a lot if you're not paying attention. It can move a lot. Now, there's probably the probability of it, at least in the short term, to go down, I think is more probable, probably 60% chance of it going below 50 than to go above, 55. All right. So, buying cold may be better in the short term, but you don't want to be caught off guard when this tick up starts to happen maybe in August or September. So it may be smart just to kind of just accumulate shares and view this as like a two month play for it to come back up, during that September and October blip. It depends on how you want to play it, short term or long term. All right, so cold. So looking at it from a natural gas point of view, in the near term, I see trading between 3.5 to 3.7. All right. And you have a close at 52.55, a support level at 50 in about 48. And you do have a resistance level that's 51, I'm sorry, a support level of 51.48. But that could be broken. That you notice it was going up and breaking it, going up and breaking it. So 51.48 is definitely it's battling. Now the question is, and when you see this, when you're seeing this battle for 4 weeks or so, it's going to break. Now the question is it going to break up or break down? I think it's going to break down in the short term. So, um, so you have a 52.55 close on Friday. You have a 51.48 support level that could break, and then the next one would be 50 and 40, about 48. And then if it breaks up, right, then you have a next resistance level of 55.28. For 55.28, now you're talking about, hitting the 3.75 mark on natural gas. So just keep that in mind. All right. This thing can move pretty fast. So you have to watch the natural gas. If natural gas goes up, oil goes up. If natural gas goes down, then cold goes up. Now, TYD is a is an ETF that's dealing with the belly of the curve. It's a long based on price between the 7 and the 10 year through the 10-year treasury. All right. So if treasuries go up in price, that means that bond yields go down. So keep that in mind. So the treasury goes up in price. That means that people are buying bonds. So if people are buying bonds, especially in the belly of the curve, TYD is going to go up. Now, if the equity, typically when equities go down, people buy treasuries. And usually it's the belly of the curve. So this should appreciate if we think that equities will go down in the near term. And if that's the case, then we should see an appreciation of this. If equities start inching close to that 6,130 mark, break the 6,000 barrier, then this will most likely go down in price. So the close was 2450. The close was 2450, 2451, and we have a support level at 2396, and we have a resistance level at 25.02. All right. So if equities are going to go down, then we're going to see an appreciation of TYD. All right. And it doesn't move really fast. You're seeing here, these are all day candles. All right. And it stayed in a range between 24 and 25 for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, half a month. All right. So it doesn't move that fast. So, unlike Boyle, where it moves fast within a day. So if equities are going to go down, then most likely TYD will go up. So this is a great hedge against equities. If equities are going to go up, then this is going to go down. Right? That's the way to look at this. So right now, support at 2396 and resistance at 25.02. Now let's talk about the VIX. Now, VIX is a index that you can invest in through different types of ETFs that I will talk about after this slide. This is how you would trade VIX. But VIX is an index that shows volatility. And the point that I'm making is that their volatility is heteroscedastic, that it spikes up and then comes back down. Now, there may be a buildup of risk, and then there's a spike, but that spike doesn't stay elevated. It always comes back down. So that's heteroscedastic. So this VIX index spikes, all right, with a certain periodicity. But you can also notice that it starts to increase in energy, increase in risk, and then eventually, blow out. All right, so let's take a look at, let's say, 2023. All right. When you saw, a spike, let's say from July, we didn't see another spike until August. So that was about 30 days. And then we had another spike of risk, even though it was small in the relative terms compared to those mountains of spike like this one. But we had this increase in about it within that month in August. Now we're talking about between 15 and 20. Now, the rule of thumb is that anything between around 15, like 17 to 12, 12 to 17, there's no risk. So these little spikes don't mean anything. All right. So anything that starts to elevate above 20, you start to go, okay, what's going on here? All right. So if we take a look at, let's say, July, it was stable. This was in 2023. Stable. It's at 15. It still hasn't broken 20. It's still, all right, it breaks 20 in October. So you had August, September, October, 3 months, and then it spikes up. All right. Elevated risk that's starting to build up. Then comes back down, and then October is always a strange month in trading. Some theorists think that it's because of change of future contracts in for the agriculture harvesting, but October has always been a scary month for financial markets in the United States, at least. So there you had this elevation over 20, all right, and then it started to come back down. Now you had 1, 2, 3 month, and then the spike, and then there's some volatility and it comes back down. Now another thing here, it comes back down and it's now trading in that calm period, all right? And so we have 1 month from November to December. So 1, 2, 3, 4, 5, and then it was calm, 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 and then all of a sudden a spike. Typically, it happens every 2.5 to 3 months, but that's one was a very calm situation. So if you have multiple months, if you go, the point I'm making is if you go beyond that 2.5 or 3 month periodicity, then there will be a spike above 20. And therefore you can bet on the VIX to increase. All right. So you would want to long the VIX index because there's a buildup of stress. So it's calm, calm, calm. So you just buy into the index that would to long the VIX. Right? You buy into an ETF that would long the VIX. You're just buying in, buying in. You're not making any money. You're waiting, you're waiting, and waiting, and then all of a sudden it spikes above 20, and then you make your money and close the position. All right. Another way to do it is that you're calm, calm, calm. You're waiting, you're waiting, you're waiting. All right. And then once you start to see that the VIX broke 20, then you short the VIX and then it comes back down. So there's two ways to do this. Another way to do it is to do both sides. You see that you're waiting for it to go past the 2.5 mark. It did. You buy in longing volatility, and you're waiting, waiting, waiting. In this case, you're waiting another 2 months or so, and then it climbs up. Then you sell the longing of volatility, and then you actually short volatility, and then it comes back down. So you didn't make any money, but you're accumulating shares. You made money, you close your long position on volatility, and then you open a short position on volatility, and then you're making your money. And then once it dies down, back down to about 15 or 12, then you close out again. And then you wait. Now here, so it's peaked up in April of 2023, above 20, and then went back down, right? So now we're at 1 month, 2 months, 2.5, and then 3, and then it spiked up. See what I mean? 2.5 to 3 months is when you sit. So when you shorted volatility, you could have put in a longer position now in volatility and waited out, and then boom, it popped up. But you got to wait. Sometimes you have to wait it out 2.5 months, 3 months. In this case, you had to wait it out almost 4 months. So, and then once this spikes up, then you close, and then you short volatility and you make your money. Now, you don't see these types of volatilities that often. These are rare. What you'll normally see is around 15, then it spikes up to about 25 and then comes back down. All right. These are rare. You're not going to see these very often. All right. So like right here, you're above 20 and then it comes back down to 15. Above 20 comes back down. This one stayed elevated, right? But it went down to about 17, then comes back up above 20. So it's trading at about 25, not 25, about 22, 23, then comes back down, gap down. All right. Comes back down to a normal level, then spikes again. All right. So there are different types of volatility traders. There are ones that are willing to wait it out and they long the VIX index through an ETF. And then right when it spikes, then they close out the position right away. If you don't close the position out right away, you're going to lose money. You're going to lose your profit. All right. There's others that just wait until volatility spikes above 20 and then short. And there are others that will try to play both sides. All right. So let's go into more of the detail of this. These are minute charts of volatility. So you have SVXY and SVIX. This is shorting volatility. Longing volatility is VIXY and UVIX. All right. And how do you use these? All right. Like I said, if you are shorting volatility, that means that the volatility is already spiked and you're trying to get that and you're trying to get that profitability. So here, as volatility, like here, volatility spiked and then starting to come down. This line here is volatility. This is the VIX index. This is the actual price of the ETF. All right. So here you have VIX spiking at 20 and it started to come back down. Well,
Uh-huh.
when the VIX is starting to come back down, this ETF will start to go up. So if you hit 20 on the VIX, then you buy this ETF and you just hold it until VIX comes back down to about, 17 would be a good number. In this case, it was 19. All right. But you had a decent profit because you went from 20, you bought in at about 20 and you sold it at about 41. Okay. So that's a decent return. I'm sorry, not 20. You bought it at, I read this wrong. You bought it at approximately 40.3 and then you sold it at 41.09. So that's a decent profit if you have a decent number of shares. All right. Same thing with SVIX. Okay. Here, VIX was spiked at 20. Then you buy in to the index to short volatility. And this would have been trading at about just at about 14. And then you close it at 14.61. All right. Because now it broke, below 19. All right. And then as VIX starts to go back up, you're not in this position. You're waiting for it to break 20 again. And it breaks 20. All right. So it went from 19, it went back up to 20 or past 20, right? When it passes 20. All right. Then a good rule would be to start to buy the index. That would be the rule. In this case, the VIX continued to go up and this started to continue to go down. Don't get shaken out. Just wait it out. Just wait it out. And this is what has happened last trading session. VIX is starting to go up because of what's going on with Israel. All right. So this would be if you were caught in this kind of situation and the rule broke, then you would be losing money in this index. All right. So that's kind of the worry that happens is that if you're playing the rule, if you're playing a rule where if you break 20 or 25 or whatever, and then you buy this index, then and you're waiting for it to come back down. If stress continues to be built up in the market, the VIX is going to continue to go up and this ETF is going to continue to go down. You're waiting for the VIX to start to decay. But in this case, it didn't. So you would purchase at this point, but you would have still been losing some money here. But look at what's going on here. If you purchased at this point, remember, you purchased, the VIX was high here above 20. You purchased and it started to decay, and then you made money and then you sold it after it broke 19. All right. But in this case, VIX starts to come back up, breaks 20. Let's say you buy here, but it continues to go up. Well, this would continue to, it's still going down. Now, VIX now is at 2150 or whatever up here. And this ETF is you've lost based on where you're at. You purchased it at about 14.2 and it's trading at, around 1383. Okay. So but the problem comes in is, will this go, if the VIX starts to go down on Monday's session, then this will appreciate. So you might have to wait it out if if your entry point wasn't that great because VIX index spiked. All right. Now, now this is not for the faint of heart. I mean, you got to know what you're doing when you're playing this type of thing here. Okay. Now let's take a look at what would have happened if you just played the long. All right. Now remember what I said. When you short, when you short um, VIX, you try to get to the spike. And once where there's max pain, and then when there's max pain in the VIX, and then you buy into these ETFs that short the VIX, you get the max benefit. But in this case, you were about halfway up the chain here, and you might have to wait it out before it starts to come back up, and then this ETF will start to come back up. So if your entry point is not right, then you gotta be careful. Now another way to play it is longing VIX. Now longing it would have been, okay, let's say you purchased up here this index, this ETF, all right? This, and then you sold here. Well, what you could have done is that you could have now started to accumulate shares in waiting for VIX to spike again. All right. So that was at about 12 o'clock. All right. So let's say you bought at 12:30 this index, this ETF. VIX started to go down. You're starting to make money. You sell at around 12 o'clock. And then you purchase a long for VIX for volatility. All right, at 12 o'clock. So you're right here. And then as the VIX is starting to climb, your ETF is starting to climb too. All right. But again, VIX can be volatile. So kind of have to look at the trend. And that's why I said these are minute charts. This was the intraday trading of Friday. This is looking at it daily. And if you can time it, there's a periodicity with VIX. All right. And like I said, calm markets are around 12 to about 17. So anything about over 20, that's when you start to kind of worry above that line. All right. So if you're in between periodicities, VIX is low. Well, if you're in between periodicities and VIX is low, then what you want to do is you want to be, as it's getting closer and closer to maybe a spike, you want to purchase a VIXY or UVIX. And then right when it spikes, right when you see that spike going from in the intraday, we were, going from anywhere from, let's say the low night, let's say at 19, and it went as high as 2150. So you see that 1.5 increase in VIX, and then you want to sell. You want to sell right away. All right, and then get your profit. This is a very short-term play here. All right. But okay. So if you have low volatility in between periods, accumulating VIX long in that second month or third month, especially in the third month, and if it's still low into the fourth month, it's going to spike. For sure, it's going to spike. And you just wait it. Once it spikes, then you sell. Then you sell the VIXY or the UVIX because you've been accumulating shares and waiting it out. Now, when you sold it, then most likely there's going to be a decline in the VIX, and that's why you go in and buy the SVXY or the SVIX, and those as it's declining, as the VIX is declining, these will appreciate. So in the long chart and for the daily chart here, for example, like here, you know, we had a VIX that spiked, all right. Then you short VIX, and it spiked at, above 20, it's about 23. And then you short VIX, and then it went down to 15. And it went down to 15 within 1, 2, 3, 4, 5, 6, 7, 8, maybe in about a week or so. So about 5 to 7 days, you've you've made a decent return from that decline in volatility. But you got to really pay attention. If you do this kind of thing, you got to pay attention. You can't just buy and hold. It's something that you have to watch very, very closely. If you got to look at the day VIX, and you got to look at the intraday VIX and determine when to go in and when not to. It's not easy to time it. It's not no one can really truly time it perfectly. But you get a sense that if you're at about 25, typically when you're above 25, it's going to go down, right? Every time it's at 25, it'll go, it's at 25, it's went up to 30, and then it came down really quick. You have these moments in time, which are rare. This is tariff related, all right? You know, I forgot what even this one was. This was in 2024. I'm not really sure. I don't remember what this one was. This might have been the attack. What was this? This might have been the attack with, I'm not sure what the news event was. It might have been with Syria. I'm not really sure. I'd have to look it up. But these aren't that often. But once you're above 20, typically it goes back down. Hit the 23 mark, boom, it goes back down typically. But you're above 25, it's definitely coming back down. It's rare when it doesn't. Now, if you get caught in these rare events, you just got to wait it out. You're going to be losing some money in that VIX index, but you got to wait it out. Sometimes do dollar cost averaging to help yourself in it. Playing volatility is difficult. It's not an easy. It's like riding a wild horse, but it can be done. It can be done. That's the point I'm making. Probably the safest bet is to wait until the VIX spikes above 20 or 25, and then short the volatility. And then by shorting the volatility, you can short it quickly with the SVXY. Wait for that day or two, 3 day decay, and then sell it. With longing VIX, you want to go into the position at about, you look at these periodicities. Like here, we had a big spike and that came back down, right? So that was like early April. So April, May, still came down. And then, like I said, every 2.5 months, roughly about every 2.5 months, it did spike back up in about almost 2 months. All right. So this was a little bit earlier. Now, there was a big spike before that. So that might be because there's stress in the market, but this is tariff related. And this is kind of an oddball kind of trading era that we're in. So we're back into this almost like spiking above 20 every month or so. Kind of similar to what we were seeing in this case here between October and November. Broke 20, came back down. About a month later, broke it again, a little bit less than a month. Then it was really, really calm. So I think once the tariffs get over with, we're going to probably have a few months of calmness. That would be the perfect time to start accumulating shares for waiting for VIX to spike. Because when it's calm, then this index will start to go down, and you're just accumulating a little bit of shares, waiting it out, especially in that third month. But the safest bet is to wait until you see a spike above 20, probably 22, 23, or 25, and then short it. right away and then short it for that day. And you just short it by taking the SVXY or the SVIX. So that's how you play the VIX. We'll go over this again. It's complicated. It's not, you got to get a feel for it. Because like I said, here's a perfect example where you short the VIX at this point. You're making money up to this point. But let's say if it breaks 20 and you bought here and you're in intraday volatility that's continuing to increase, which we did have, then you have you're losing money in this position. So just it's something that it again, this is not for the faint-hearted. It's not a buy hold strategy at all for either shorting or longing VIX. It's something you have to kind of pay attention to. Looking at the day chart and just kind of trying to get a feel for, are we going to have a monthly spike, or are we going to have a 2.5 month spike, or are we going to have, you know, typically in a normal era, it's about 2.5 months to 3 months. But if you have a building up of stress in a market for whatever reason, because of politics or because of war or whatever, it's usually every month. All right, so just keep that in mind. So that's what we went over. We went over how to trade the VIX, how to trade the 7 to 10 year treasury market, how to trade natural gas and oil, the equities through SPY for the S&P 500, and BITO, which is Bitcoin. So thank you for listening, and hopefully you learned something. Monday is going to be tumultuous because of what was going on with Israel. And we'll have to, see what happens. I don't know, oil, there's probably going to be some volatility in the oil market on Monday, I suspect. I suspect on it. But will it be as volatile as what we saw in the trading session on Friday and late Thursday? Probably not. Probably not. I don't think it's going to go up to 100, but it's very possible that we break 80. It's possible, but I don't think it's going to stay above 80 for very long. So I think shorting the oil market, building short positions is probably a smart idea. Um, but it all depends on this escalation between Israel and Iran. So please help support the work that I do by making sure you subscribe to all my channels. I have 4 channels on YouTube, Brighteon, Bitchute, and Rumble. Make sure you click the links in the description of this video and all my videos and subscribe and to make sure you get notified. Share the links with your social media. Ask people to follow me. All these videos I do are for free. If people would like to help support the work, please donate on my website, the-studio-reykjavik.com. And also, if you would like to help support my work, get the great products that I have on my store. It helps your health and wellness, and it also helps for me to do the work that I'm doing with these free videos. I greatly appreciate your patronage. Thank you for listening, and have a nice day.